Hello, everybody. Brian here, Quantlabsnetcom. I wanted to go over some of the other groups I have. There's a total of three. This one's a chargeable one. So if you come under more groups, what you'll find here is the list of groups. So I'm in the admin mode, but if you are an outsider, you'll come to the group and then you'll be asked to join. And then in there, you'll get a plan. The current one we have is fairly affordable. That rate 47, um, and it will be going up in the next short time period. So what I'm going to show you is some of the older material you'll find in this group. This is my former Quant Analytics section. It's very vast. I'm able to track so much data. I want to make sure I keep it simple for people to fully understand. So let me show you what you can expect. Let me just show you the Oanda scan, as I call it. So this Oanda scan basically involves um, CFD and forex. So this will I've developed a technique on MotorWave, the trading platform, scanning about 180 different assets available on Oanda. And as I said, it's CFD and forex. I don't use this for trading on Oanda, but I use it for just a general guideline of what's going on out there globally. It's been very good analysis. So, for instance, I segregate everything out into the maybe, be on the watch, and then I have another pile that I would consider maybe trading if this was something that you want to trade. So, basically, I'll have a commentary on it. So we have XAG, which is gold, XAU, which is silver. Sorry, XAG is silver, XAU's gold. I'll put a link where you can find the symbology for all of this. We have Netherlands performing here. We have Japanese yen performing. Now, remember, I posted this yesterday. So, again, I put my thoughts into it. So, this is really meant for non traders. So, let me just go down farther, just show you. This also includes uh, things like my market scans. So, here, what we've got here, I've got about 64 market sectors I track globally, right across the board for equity and credit, bond, all kinds of stuff. And these are ETFs. So what it will do is it will scan a batch of available ETFs on which I use Interactive Brokers, and it'll scan those and the performance. A couple of things. What it does, this can take anywhere to run on my end, depending upon the number of instruments that are available. It can scan 60,000 instruments in about 5 hours. Now, for a trading desk to do that, or anybody human without the programming skills, it could take them days, weeks just for that snapshot in time. Here I'm able to do it in a very short period of time. I usually keep it down to about under 5,000 if the markets are not doing too well. And now that I focus on low volatile ETFs and stocks. So a lot of what I find, and I'll go back a year. And what I find is a lot of the recommended stocks and ETFs are highly volatile. And that's why a lot of people lose money. So you want to focus on low volatile. And this, what it will do is it will focus on giving you the category and the range of monthly potential return or has been potential return. So you can see here, we've got that are really performing very well, obviously in a bad economy or a questionable stock market environment. Dividend income's number one, semiconductor, obviously because of NVIDIA and the like, gaming, which would be considered gambling, crypto, and so on and so forth. So out of that, you'll see a lot of the negative ones as well. China, US shorting, US utility, and so on and so forth. I try to do this every day. Okay. So out of that, um, there is that. So let me just go back into the finance group. So in here, again, this is all private. Let me just scroll down, see if there's anything else I can show you. So again, this is another important one. These are the stock picks and the ETF picks. I have a number of metrics that I use to say I'd consider them, but they don't make that final metric or watch list, we'll call it, that would be put on my watch list. So here we've got some interesting things happening. This was put out 6 days ago. So in this case, it can flip where if the markets are so weak using low volatile and not performing, what will happen is you may get one single ETF. In this case, it's a semiconductor um, ETF. And here you may get some stocks. Now, what I really would want people to pay attention to is this section right here. You can see here only one ETF came out of that. I could have been out of I don't know how many thousands, but a lot. Also, you'll see here selected stocks. Now, these are trying to meet all my metrics based upon a back history that I use within TradingView. That also includes probability of winning on trades, probability of that. So these stocks that you see right here, these tickers, would be considered maybes. But what I will say, when you get like a TGAX or a WMT, which is a Walmart that consistently pops up on this list every day, you know that those are probably winners. And when you look at those stocks, they do very well at that time. And then what will happen is if you carry on with my learning about setting up your algo trading software, which is really TradingView and an additional service that I have in one of my courses I've talked about, there's no coding needed to do this. It's 100% automated and it works and it can work 24 hours. So when you're kind of sleeping or you're busy, this system will do all your trading for you on your behalf. Is it going to be perfect? Absolutely not. But that's where you got to make sure you use the right coding strategy in PineScript, TradingView's language, along with the right assets, and the timing has to be right. We all know that. But here we can have it run 24/7 and it won't shut down as long as you keep your TradingView running. And at some point, I will be running TradingView, my TradingView app on a cloud environment in Windows. I'll probably put up a course on that. It's very cheap every month for like $12, but it comes down to security because if a hacker does get in, you are publicly exposed on the internet. You can pose a risk to your account. So that's another down the road course and stuff like that to really get into that. So we have these three major pieces. Um, I do try to track Bitcoin, but it's a really tough gig right now in crypto, namely in Bitcoin. I'm connected into Interactive Brokers, as said, because then I got a big swath of like just under 1,000 ETFs to choose from, and they are supported in all major countries throughout the world. So that means I can kind of travel. So that's where we're at right now. There is another archive in here, which is huge. What that does, it will enable you to see. Let me just show you an example here. This is really not really important, but if you're really wanting to make sure that you're able to choose the right assets that have a winning ratio, let me just show you a breakdown sample. Okay, so here I can generate these different types of reports. So I'm just going to give you one sector. I have a master sector, which I just showed you, one of the uh, past uh, past posts. So these are the sectors with the returns. So you've seen that. In that, you can break it down into something like let me choose something that would be a popular one. So let's focus on the Nasdaq. So the Nasdaq will have basically your two different text files in here. I can post this from time to time. Just depends upon what people want, but this can easily overwhelm you. Here are the available ETFs that can be traded on trading on interactive brokers uh, with TradingView and this methodology I've come up with, where you don't have to be a programmer. Here, this will give you. This is all a portfolio optimized, just assuming this one sector. So what it will do is it will say, okay, here we have this ETF called 1Q. 27% of it should be allocated along with another one called DIDIV. Okay. And out of that, those are your performers, or in this case, HNDL or NUSI. It just depends upon the performance at that time when that scan happens. And also there's another associated file that comes with that. So this one as well. These are the average returns over the last month or so. You can see here how those averages did. One thing I want to make very, 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 very clear on when it comes to your ETF selection, this is very helpful, this type of analysis, because as you can see here, we have quite a few number of ETFs to pick from that are supported within Interactive Brokers. The problem is we don't know which one's the optimal one to buy into. So here you can see on average, there's some profit to be made in some of these ETFs. There'll be better profit in others. When you go into TradingView, let me see if I can load that up. Um, I'll just load up my TradingView as an example here. This is one of the reasons why I use TradingView. This is really good to break down and research which one is your best performer from an ETF perspective. So in my case here, let me just plug in some of these ETFs here. Now, I use a custom coded strategy that I've been using for about a year. It's okay as a standalone. So let's say we have here, let me put up this one. So this is a BIS, which is a biotech. Um, yeah, I think it was HNDL. That was one of the better allocated ones. So HNDL. So it's a strategy shares NASDAQ 7 handle. As you can see here, this is somewhat uh, volatile, I guess you could say. You can see here, it's only giving you a profit factor of 0.89 with a 34% win ratio. So that's not very good as an ETF for this one. Whereas, let me just pull up another one that might be a little better. So we have here, and a lot of them are ones that you don't know, like you don't know the names of them. So this system, this type of metrics will help you identify which are the better performing ETFs. So we have here one called First Trust Nasdaq Technology Dividend. Boom, look at that. There's very little dips there on the downside, so that gives you a much higher profit factor. So this is what I'm trying to tell you. This is so important to know, and why I use TradingView for this. You can see the quick snapshot I get using this uh, strategy, and I can give people access to it through TradingView to get these metrics. Without these metrics, I'm dealing with portfolio advisors that I'm not sure if they do this or not. But the question would be, if you were to put money into the previous ETF, you'd be getting no performance at all. Actually, you may be actually losing money. Whereas here, for every dollar you put in, you can expect to get back 59 cents. That's what the theory says, right? And then we have the profit percent profitable for every trade. So that means if it's over 50, it has a higher potential to be profitable. So that's important. And you can see this kind of snapshot available in TradingView. This is why I use TradingView, because there's no other platform that I've seen that does this. And one of the reasons why I focus on TradingView because there's no other platform that does this from a perspective of a trader. And then you could see which ones are very profitable. So you can see here we had the Fidelity Nasdaq Composite Index, same idea. And you can see here it gives you a long long close. So essentially, depending upon your time frame, this is a 4-hour time frame. We can have this system run TradingView with this service that you can recommend, and just have it do a long and connect in the service and put in a long position into your interactive break brokers account, and then do the close. And you can see this is 100% accurate. So you would be able to passively trade depending upon your, again, your time frame. So if I go down to 1 hour, you can see it just radically, profit factor goes down because there's more noise in the market, and the percent profitable is still the same. But in this case, if you go to 4 hour, you can see the mass difference between the two. Just no other platform gives this to you. No, nobody works and is an affiliate of TradingView. At least I'm not. I just love this ability to do this sort of thing, to individually access why these particular ETFs are doing well. Um, I could do the same thing with any of these any of these ETFs. Let me show you gold, and I want to use gold as a really good example on why this is important to do. Okay, let me just see if I can find it. Uh, let's see. Yeah, so we have here gold right here. So if I was to pull that up, go through the same process, and again, there's no programming here. It's pretty simple. All these people that go out and say you should buy this, should be that. You don't know if it's optimal. Here, you can get an idea what's optimal and what you should and shouldn't buy into. So in this case, we just looked at the Nasdaq, and you can see here we have some ETFs to look at. So you can see here we got a bunch here to choose from, including GDX, GLD, and they're not, maybe not performing as well. Let's check out how GLD is doing. That's going to be one of those more popular ETFs. So if I go into GLD, right, and you can see here the profit factor is not bad. Win ratio is 39%. Whereas if I do the GDX, same thing. Now this is different. Gold miners ETF. You see, this is not going to be as good. 40% win ratio. But if I do a comparison between the two, you'll know which one you want to put into, right? Just by looking at this. So just knowing, doing this, and this is going back since May, 4 hour chart, you're losing money. So again, that's why it's not in the top range. Why would you continue holding gold, right? You'd be losing money. That's an opportunity cost against your portfolio, which is now negative. Okay, so when you start to do these type of research, this will help you optimize your portfolio in Interactive Brokers, fully liquid, and so on and so forth. So these are the not great ETFs. So whereas I have here OUNZ, uh, let me so that's GDX. So ONZ. So this is Gold Trust. So this one's at 0. Wow. The other two are negative, but this is going to give you a return of 0. So you're not losing money. That's why there's more money potentially allocated for this particular ETF. There's also another one called SGOL. So this is physical gold shares. This might be a little different. Yeah, still negative. But you get the idea of what's important here. Okay, so that's why the scan that I can offer and put these into this group, I can do that. It just depends if people want that. Okay, so let me just show you another very important chart here. So let's say, uh, okay, so we all know that there's always going to be a benchmark that we should use to make sure that whatever we put our money in will outperform the benchmark. So in my case on TradingView, let's look at something like QQQ, which I use. So this is you can see here it's up 10%. Okay, and again that's a 4 hours, and that's since uh, May 24th. So in the last month. So if I go weekly, let's see how it's been doing. Uh, Weekly chart. No, let's stay with a daily. So this is now going back to 2024, just year to date, pretty well. And you can see here, gold has done okay. It's up 13%, but still the QQQ benchmark is outperforming this particular ETF. So these sort of things are important to know. But remember, QQQ is what we're going to use as the benchmark. So that brings me back to what I can provide here. So let's say we've got our commodity gold. Now, this is where very, very important for real investors, like real investors, like advisors and stuff, whatnot, the institutions. This is what they will present you with. So in our case, we have the QQQ benchmark, okay, which is QQQ. Okay, benchmark is QQQ, what I just showed you. Um, so out of all the strategies or ETFs in the gold, you can clearly see since 2014, 2016, you would have a much higher return being with the benchmark QQQ of 488% versus 91%. So when you watch the people on YouTube, the doom and gloomers buy gold, again, why would you hold gold when you're getting subpar performance versus the general market, the benchmark? Okay. So anything that beats this benchmark in yellow will will be alpha. Only maybe 5 to 10% of advisors, 5%, 10% of real traders will beat the benchmark, QQQ, NASDAQ. And then if they don't, they'll try to confuse you and say, we're going to use the MSCI global index, and then that's our benchmark, but yet our portfolio will beat it. That's their way of basically deceiving you, which is not good because they're just trying to make it our portfolio or our instruments still make more money than their benchmark, which is the MSCI Global. That's lazy. That's brutal because if I want to make money anywhere and just make money simply, I put it into S&P 500, the Nasdaq, or in this case QQQ. Obviously, it's going to cool off and it'll probably take a hit like it did here in 2020. So then you just move it out and then you move it in something like gold. That's a no-brainer. Okay. So what we want to see is to see this blue line beat the strategy. So visually, I'm going to keep that up. But visually, let me pull up one that will beat that for sure. So a good example would be, let's say, not like, okay, people are going to ask about crypto. Let me show you crypto as just as an example. So you can see here, the benchmark is here, and then the crypto is kind of like messed up. Um, Crypto right now is not the place to be. This was the time to be in crypto. 2021 was a very good time to be in crypto, namely Bitcoin. But you can see here on the cumulative returns, they're pretty well in line, but with that crazy volatility with crypto, I'd be really hesitant to want to put money into crypto. Here's why. Because in every chart, every pretty well everything that you see, what I'm showing you here, this portfolio tear sheet, you can see here on a monthly return since 2020, all the negative returns for the month. Again, not trying to put down crypto, but it depends upon where you're at. If you're willing to stomach this kind of volatility, go for it. So you're getting a 214% return, 459%. It's crazy. But you can see there's not a lot of green in there. Whereas, let's say with gold, the monthly is a little better, a lot more green in there. That's what you want, and very little red, but you don't want red either. So you get that in every single chart. So that's crypto. So from a real portfolio perspective, I'd be kind of looking at crypto and like, yeah, I don't know. It's hard to, it's really something you got to figure out based upon your risk portfolio and based upon your risk tolerance if you can stomach that. But again, why would you want to take on that kind of asset class or market sector when you can get more steady, predictable returns? So let me show you another one. I could go on and on like this and make a lot of videos on this. Let's take a look at Japan. A lot of people, a lot of the institutions will be buying in Japan, but unless you're watching the news, you wouldn't know. So you can clearly see how there over the last uh, since 2020, Japan has done pretty good, and it's starting to accelerate and meet up with Japan. Now, will it continue to beat the market or the strategy? No, it's underperforming. But again, right here is your monthly returns. Okay, you want lots of green and darker green in that chart. So let me just show you one that's been pretty good. And this is where the wealth is being created, true wealth, um, and whatnot. So in here, let me show you like a US, maybe the NASDAQ might be a good one. Yeah, right here. So again, we're using QQQ, which is tied back to the performance of NASDAQ itself. You can see here, NAS just exploding here the last few months. Okay. And you go into it and you just see some very strong, more green, more positive, and there's going to be some negative shocks each year, -30, -20. So you'll see that. Um, but this is something I'd rather be in, and that's where you're going to build real wealth, where it's more predictable. Um, Also, you can see here, I put in a lot of the typical quant statistical metrics in here. That's important to the portfolio managers. A couple of highlights here that you could take away on these. So when you look back on each of these sectors, you'll kind of know which ones to go. I'll give you a tip here as well. If I was to generate each this every day, um, this number will be real time for the month. So as long as that's performing and profiting, you stay in those sectors, keep those positions on for those ETFs and maybe stocks related around those ETFs. That's important. What will drive a lot of that, and I'm going to give you a tip here because it's so far into the video. If you type in, I don't know, let me get a random ETF here. Um, let's say this surprise one. OU, no, this one. This is the. I think this was the miners. So you can tell what the holdings are. Okay, so when you go into put your symbol SGL, physical gold shares, what you'll find here is yeah, you should be able to find your holdings in here somewhere, unless they took it out. But there is a way. Oh, here you go. Holdings right there. So this is one of the only places that I know you can get comfortably the holdings of uh, each ETF. And it looks like it doesn't have any holdings, but you can go and do that for any ETF. Let me just see if I can do SPY. Let's say, as an example, Spider STF holdings. There's other places to go. But you can see these are the top holdings percent wise in that ETF, just to get you if you want to know where to put money into a particular stock. Okay. So if you know your ETF that you want to go into, you can figure out what your holdings are by going to something like Yahoo Finance. Okay. So coming back to this, uh, these the ones I'd pay attention to, everyone's going to start paying attention to the sharp, which is fine. Okay. And there are uh, portfolios, if you hold and don't touch them, they'll give you a pretty good port. I've had sharp ratios that have been fairly high. Here we spit out the compounded annual growth rate. And you can see here that this strategy or these particular ETFs have pretty well more than doubled the benchmark of QQQ. Okay. Um, Sortino, I would probably more pay attention to than Sharp because with Sortino, it also includes volatility and it smooths out the volatility. So you'll get more of a logarithmic pattern of and smooths all that volatility. One area that's very important to know is you don't want to be in a mix of portfolio, namely ETFs or whatever it is, to have a max drawdown of no more than -15%. So here you see -35, -71. But here's the thing. Here's the sacrifice you pay. So if you go back to the gold, what are your max drawdowns? Still pretty bad. That should be the case. I could bring up T-bill one. Let me just pull up a T-bill. Um, Let's see here. US financial. Just pull that up. So what you get if you're new to all of this, here's the sacrifice. You can see here that the financial, which is T-bills and all that, treasury stuff, you can see here the ratio or the Sharp is kind of still low. But the thing is with this metric, this will still be profitable. The monthly, there should be more green as you can see here. Also, going back to the downside, the importance of that is right here on the downside. Ooh, that's a surprise. But this is how extreme the markets are right now because of the debt, national debt, da. But the max drawdown shouldn't be more than 15% overall the last year, overall since 2014 in this case. So you do get all of your standard metrics here. Risk of ruin, Kelly criterion, and so on. You could go on and on and just go crazy on this. Average drawdown as well. Okay, so I just want to show you the depth that you can go here and to know which sectors to be in and have more of your cash in those sectors. So in this case, and it seems to be still the case of the NASDAQ going pretty crazy. So that's where I would probably keep your money as well. And then, as I said, with the holdings within the ETF, some of these stocks as well. In my case, I'll just give you some recent examples. So if the markets, well, let me pull up TradingView here. Okay, so the markets have done pretty good. That's on a daily view, 1.93 to 13%. That's pretty good. But as I said, these are all trend based, momentum based. So I'm looking for more safer, less volatile stock. So let me just pull one of these out. So right now, a good one that has been pretty good. Let me open up another chart here. Is Walmart. Okay, just as a free bonus there. So if we look at Walmart, you can see here it's just been a nice steady move up and it's really starting to take off now. When you compare that to, let's say, Amazon, okay, how's Amazon been performing? You can see here it's not performing as well. Well, what would you rather have, a 40% return in Walmart or a 3.6 return with Amazon? So most people probably put money into Amazon. Now, I'm showing you this because this Walmart has been outperforming everything in the since last 2 years, really. 40% on a stock's pretty good and very little drawdowns. Excellent stock to own. And the other thing I like about it, it's less than $100. That's one of the policies I like to go after is stocks that are less than six 200 less than $100. I'll show you why. Comparable stocks to this, and again, this is what my system will pick out from all of these postings I've sent out on these particular stocks. So right now, if I look at TJX, which is pretty well like a competitor somewhat, you can see here TJX is doing very well. It's nearly double than Walmart. But if I was to show you an individual price, again, this is your tolerance, this is your risk that you want. You're dealing with a stock now that's going over $100. I can guarantee you in the next few months you'll be hearing about these companies. Walmart, TJX are doing very well. Another one that's doing fairly well, and just do called Ross. Think or sorry, Ross, another retailer. So these are Ross stores, right? So Ross stores 8% versus 17%. And then again, I can throw in my Walmart. And again, you get all the information. I may start doing webinars, all of that. Um, live behind the paywall for my members and just doing this type of analysis. I may be able to do programming related stuff, but I just don't see the point in blowing your brains out trying to do everything with what you want, the same goal, to make money to get a return with Python, C++, Java. I mean, it's really complicated stuff. Let's not lie there. Whereas, you have TradingView, everything's all self-contained in one app, and then you can live trade with the setup that I've got, as I explained earlier. Doesn't make sense to me. And then you can always use this profit factor and percent profitable. So just from a from a high level on this particular high performing stocks, look at Walmart in blue here or cyan. It's the best performing stock out of these three, and it's the cheapest. That's why I like to buy stuff under $100. It doesn't make sense to me if you're going to pay $200 or $300 for stock. It gives you good performance, whereas you can put more money into a stock that's lower than, let's say, $100, and you're getting double potentially return. And you just got to know about this stuff and analyzing it. That's all I can tell you. Um, so there's that to know. And again, you only get that in this group, and it's very cheap right now for that type of analysis. And again, why would you trade forex? Why would you trade crypto? Blah 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 blah. We want to trade simply, either through stocks or ETFs that are everybody's trading in, and it's safe and it's regulated. And that's all I can say. Anyway, so if you want to know more about TradingView itself, yeah, go over to the Quantlabsnet.com and get in there. I've got a registration page here under Learn, and in there you'll get a 45-minute video on why I like TradingView, and I'm just selling you this stuff in this description for the group. Anyways, we'll leave it at that. Thanks for watching, and have a good day.